So work together, 13-1. This is going to be a really short one. It should not take you too long. Metro Company's payroll register has the following totals for the semi-monthly pay period, July 1st through the 15th of the current year. T accounts, remember T accounts? Back in the day, left side debit, right side credit. Okay. T accounts and a cash payments journal are provided below. And I'm going to guide you through the following examples. So here we have, salary expense. That's the word I couldn't remember earlier. We're going to go through and use our T accounts provided to analyze Metro July's 1st through 15th payroll. So we have from our payroll register total earnings, federal income tax, Social Security tax, and Medicare tax withheld. So what we need to do is we have to take this information and put it on our T accounts. So total earnings is going to relate to our account salary expense. Salary expense is what type of an account? Nope. That's a normal balance. What's its classification? Expense. Name's right in there. Okay? So salary expense is an expense, and expenses have what for normal balance? Debit. Now, all of these that say payable is a liability. Liabilities have a credit normal balance. Cash is an classification. Asset. Assets have a debit normal balance. So when I go through to take a look at this, total earnings, so I have more expenses, so therefore my salary expense is going to need to go up. Federal income tax, Social Security tax, and Medicare tax, I owe more to the government, so it has to go up, so it's going to be credited. And then we have to determine our cash, which is just like doing some math. So I'm going to take these numbers and put it in my T account. So total earnings goes as salary expense as a debit of $12,600. Now, we have a heading on our payroll register that says federal income tax withheld. We do not have an account called federal income tax withheld payable. We do have an account called employee income tax payable. So you need to know that federal income tax withheld goes to the account employee income tax payable. So let's go ahead and put a credit here of $1,186. Social Security is going to be credited for $781.20, and Medicare is going to be credited for $182.70. Do my debits and credits equal? They do not. So the account that we are missing is the one that's listed there that we don't have anything for, and that's cash. Now, on a payroll register, your cash would already be calculated because it would be your total earnings. No, excuse me, total net pay. So we need to take out your calculator. And then on your calculator, I'm going to put in $12,600. I'm going to subtract from it $1,186. Then I'm going to subtract $781.20. Then I'm going to do $182.70. And so then my total was what? $10,040.51, right? That's what you got? $10,450, not $10,045. Now I have it right.
No, it's 450.
Now am I right? Are we sure? We can keep talking about 4s and 5s so you can get them in the right spot. Okay, so we analyzed our information, put it in our T accounts. Now we just need to journalize it. And we're going to be journalizing it on page 15 of our cash payments journal with the date of July 15th. So let's get our month in there. Date is the 15th. Now, Order matters, because if you put it in the wrong order, Aptly gets all mad at you and marks them all wrong. So you are going to list them from left to right in a payroll register. So the very first account that you're going to run across is going to be salary expense. Our check number is going to be 455, and you're going to have salary expense of $12,600. Now, I need to put my cash amount on the same line, so I'm going to put $10,450.10, except I still did a typo. So your cash needs to be on the very first line, and this is going to take multiple lines. Then I'm going to do employee income tax payable as a credit of $1,186. Social Security tax payable as a credit of $781.20, and Medicare tax payable as a credit of $182.70. I checked that answer. Whoop, whoop. I got them right. Didn't you get yours right? Nice. Go ahead and try it on your own.